Purvankara reported the Q4 numbers, strong numbers in terms of the sales. Realization seems a slight bit of a decline, but other than that, the profits of the company actually seeing a bit of a decline. So yes, what is the outlook for the company? The stock is locked in lower circuit right now. Let's bring on board the CEO of the company. We do have Abhishek Kapoor, who is joining in with us from Purvankara Group to talk about it. Now, overall, when I'm looking at it in terms of the quarter gone by, sales, collections, they were decent. Your revenue also saw healthy growth. Yet, the company has not managed to see a good bottom line performance. Could you help us understand what has caused the slip in terms of the profitability, and when do we start seeing that coming back to in terms of the profits? Is it expected in the next quarter?
Sales number, collections have been fantastic. Our revenue booking based on possessions has been fantastic. Last quarter, we handed over 1,188 units. But having said that, what happens is that as per the accounting standard, when you sell more, you take more marketing cost. When you are in a growth and expansion mode, you incur more G&A. But those costs have to be booked today. And that is basically creating a lot of future potential and future profits and future business, right? And so you need to look at in that context. And in that context, if you look at, then I think the margins at the gross margin level has been fantastic. EBITDA numbers are suffering largely on account of these expenses. So I think otherwise, business has been fantastic. We're very excited. All of these profits, which we are today looking at, coming in, which is in the future sales, which we are doing today, are eventually going to come to the books, and the books will start looking very different as we go forward. But somebody who understands that nuance would understand that, the business is doing fantastic, and this is just a reflection of growth more than anything else.
Your sales have actually been good. You've seen a solid uptick of about 93% on a year-on-year basis. Could you actually give us a rough idea as to what we can expect this figure to look like in the current fiscal year, that's FY25?
We don't give future guidance, but let me share with you what we can share with you. So last year, we opened about 10 million square foot for sale. This year, in the current pipeline itself, we have announced we'll open about 14 million square foot from the existing portfolio. But I must add to that the fact that we have got about 300 crores of land advances, which we have already put out there for new acquisition, because really the focus is to replace the inventory and plan for the future growth. With that, we believe to 14 million square foot, we will add a lot more, and some more at least for sure in this financial year. So we are very, very optimistic that we'll continue on the growth path, and we'll beat definitely what the average market growth is, because we want to take more and more market share. And therefore, you will see definitely higher than market growth rate as far as Purvankara is concerned.
Okay, Abhishek, if you could give us a sense in terms of what kind of an absorption are you looking at in your key markets of Bangalore, Chennai and Kochi, and do you believe the real estate sector is due for a slight bit of a slowdown in terms of absorption, or will this trend continue into FY25? Because surely we have witnessed a slight bit of a decline in terms of your realization in Q4.
I think it's more to do with the supply and the mix of inventory that is getting sold. In fact, if you look at, and I'll take up all three examples. If you look at Bangalore, we are sitting with inventory which is very, very low. You're sitting with the 8-month inventory. If we don't do any launches, we'll be sold out as real estate sector in Bangalore in 8 months. And therefore, it's just a matter of supply, and average realization may be more on account of the mix of inventory that has gotten sold. As far as Chennai is concerned, let me give you a data point. Last year, Chennai has leased out about 9 million square foot. I mean, imagine that for Chennai, right? Which means that there's going to be huge future demand as far as residential is concerned. For every 100 square foot, you need about 800 square foot of, residential. And if you look at the demand versus supply in Chennai, Chennai commercial supply is running short now. And therefore, we're very, very optimistic about Chennai.
All right, Abhishek, we leave it there. Thank you so much for joining us on the show to talk about Purvankara's growth going ahead and also what transpired in the quarter gone by. Thank you so much for joining us.
If you like this video, then like, share and subscribe to ET Now.